Welcome back to Investing Talk podcast. Today we're going to unpack a really interesting one. It brings together some cutting-edge tech and, well, dynamic market shifts. We've had quite a bit of material come across our desks about Richtech Robotics. You might have heard of them. They're steadily building a presence in the service robot sector. So our mission today is to explore their recent performance, take a look at their financial health, and figure out what's driving their visibility in the market. We want you to get the key insights quickly without getting bogged down. And hey, before we jump in, if you find these explorations valuable, please do remember to hit that subscribe button. A like is always appreciated, and share your comments. We love hearing from you. And if you've really enjoyed what you heard today or on other shows, maybe consider buying us a coffee. Your support genuinely helps us keep doing this. Okay, so let's get into it. Richtech Robotics, they're based out in Nevada, and their focus is pretty square on AI-driven service robots. They're developing automation solutions for quite a range of industries, actually. Hospitality, healthcare, general service stuff.
We're talking about robots, designed for customer interaction, doing deliveries autonomously, even giving personalized recommendations. Their product line is, well, it's pretty diverse. There's the 8M robot. That one's all about customer engagement. Then you've got the Scorpion, which is pitched as an AI-powered service solution, Metrowdy Plus for autonomous delivery. Maybe you've seen something like that around. And Medbot, which is specifically for healthcare settings. What seems really striking here is how deep they're going with advanced AI tech. They've even got partnerships with big names like NVIDIA to really boost their capabilities.
Right, and it's important to see that their approach isn't just, building generic robots. They seem to be crafting specialized AI-infused solutions that are tailored for specific sectors. And that experience factor, nearly 2 decades in this space, that's not trivial. It kind of suggests they've navigated multiple tech cycles, market ups and downs, building a sort of quiet resilience, maybe, that a lot of the newer, flashier startups just haven't had time to develop yet. That could be a real advantage in an industry often dominated by hype.
That's a great point. So with that kind of foundation, what's their journey looking like in the market right now? I mean, over the past year, their stock has certainly seen more investor interest. Seems fueled by a pretty steady stream of innovation announcements and the fact they've deployed over 300 robots globally now.
300, okay.
Yeah. And looking just at the last 6 months, you can see this clear upward momentum. It seems tied to their global expansion efforts. Like they were at Provine 2025 in Germany, and there was definite anticipation around new products they showed off at CES 2025. Feels like they're really pushing.
Well, expanding that global footprint and showing up at major international events, it's not just for show, right? It signals pretty strong growth ambitions. The question that brings up for me is, how do these strategic moves, these visible efforts, actually translate into, tangible market visibility and, maybe more importantly, investor confidence? Are they moving beyond being just a niche player?
And that actually leads perfectly into this next bit, because here's where a really significant market development comes into play. Their stock price got a lot more attention recently, mainly because of their preliminary inclusion in the Russell 2000 index. That was announced back in late May 2025. Now, for anyone not familiar, the Russell 2000 is a major benchmark for small-cap U.S. companies. Getting included is kind of a big deal. Yeah, and this kind of event, it typically sparks higher trading volumes, maybe some volatility, as all those index funds have to adjust their holdings to match the index. The official reconstitution for the Russell indexes is set for aftermarket close on June 27th, so very soon. And that could really boost liquidity and demand for their shares, especially among institutional investors. It's like getting called up to the majors, in a way.
Looking at the bigger picture here, getting into a widely tracked index like the Russell 2000 can be a powerful catalyst for a company of this size. It really elevates their profile. They go from maybe a name-only specialist to being on the radar of a much, much broader base of institutional capital.
Right.
And that shift could explain quite a bit of the recent stock price movement, Large funds might almost be obligated now to at least consider holding these shares.
Makes sense. So beyond the index news and the financial markets, Richtech has been busy, on the ground, making some very concrete moves. They announced the grand opening of Cliffy & Tea in Las Vegas. This is pretty fascinating, actually. It's a new food and beverage brand built entirely around their Atom robot platform. What does a venture like that really tell us about their strategy?
That's a really sharp question, actually, because it does seem to signal a fundamental shift in how they see themselves. It suggests they're moving beyond just being a hardware provider, just selling robots. They're leveraging their own tech in an integrated service model like this Club E&T place. It shows maybe a wider, more ambitious vision for their products, moving into branded hospitality concepts where they can really showcase their robotics in action, not just in a demo booth. It's almost like becoming an operator, not just a supplier.
Interesting angle. And they're not stopping there with these high-profile engagements either. Their main robot, Adam, has actually been invited to serve space-themed cocktails, get this, at the United States Space Force Historical Foundation's Legacy of Launch event.
Wow. Okay.
Yeah, at Kennedy Space Center, July 24th. I mean, just picture that. A Richtech robot serving drinks for the Space Force. That's a huge high-visibility opportunity. It highlights their product capability, sure, but also their marketing reach. Kind of makes you wonder what's next, right?
Well, that kind of deployment, that something as unique as the Space Force event, is absolutely crucial for standing out in a crowded, competitive sector like robotics. It has a really clear signal about their ability to scale, to engage unique, even sort of prestigious markets. It builds brand recognition for sure, and can open doors to some really unexpected opportunities down the line. They're not just deploying robots, they're making a statement.
And to actually support this rising demand and this ambitious vision, they've also been expanding their physical operations quite a bit. Back in May, they acquired a new 20,000 square foot property in Las Vegas that's meant to boost their assembly and manufacturing capacity. And they also signed a lease over in Newark, California.
So a coast-to-coast expansion.
Yeah, these seem like direct, pretty tangible moves to support the demand they're anticipating across both hospitality and healthcare. Actually, their stock jumped about 7.5% on May 14th, right after that news about the Las Vegas facility expansion broke. So investors seem to be watching these operational moves closely.
They definitely are. Capacity signals, ability to deliver on future orders.
So we've seen the market presence, the strategy, the ambition. But, the million-dollar question for any investor is always, how does this translate to the actual financial performance? Let's dig into the numbers a bit. For the quarter ending March 31st, 2025, Richtech reported revenue of $1.17 million. Now, that actually missed analyst expectations, which were closer to $1.91 million. So a pretty significant miss there. But the most recent snapshot, Q1 of fiscal 25, shows operating revenue at $1.26 million. Total expenses, though, were around $5.15 million. Now, here's an interesting point. Their gross margin, that's the profit just from selling the robots before other costs, is impressive, around 73.9%.
That is strong.
Very strong, but those high operating costs mean they're still consistently reporting net losses. The market, it seems, is maybe more focused right now on their top-line growth potential rather than immediate profitability.
And that brings up that classic tension you see in rapidly scaling tech companies, doesn't it? Balancing that aggressive growth with financial sustainability.
Right.
While that strong gross margin is definitely a positive sign, it suggests efficiency, maybe profitability in the core product itself.
Right.
The continued net losses really highlight just how much capital investment is needed for rapid expansion in this sector. It kind of implies their current losses are more about scaling costs, not necessarily a fundamental flaw in the business model itself.
So investors are betting on the future story.
It seems so. They're clearly valuing that long-term growth narrative over immediate returns right now, which is, well, pretty typical for disruptive tech plays.
Okay, so how do they stack up against the competition? This service robot space is getting crowded. You've got players like Bear Robotics. They're pretty well known for restaurant automation with their Servi robot. Bigger U.S. presence, though they are a private company. Then there's Purdue Robotics, huge player, significant share in Asia and globally, especially with delivery robots like Bellabot and PuduBot. How does Richtech actually set itself apart from these guys?
That's where their core strategy seems to come in. While some competitors might focus heavily on just one niche, like food service or maybe logistics, Richtech appears to be differentiating itself through that deep integration with NVIDIA's AI platforms, which we mentioned earlier, and also its deliberate focus on multi-industry applications.
Ah, so not just restaurants or hotels.
Exactly. That multi-industry approach, it's a strategic differentiator. It positions them potentially to capture market share across various different verticals. And that could mitigate the risks that come with being over-reliant on just a single sector. If hospitality takes a hit, maybe healthcare picks up, or vice versa. It gives them more pathways to growth and maybe more resilience.
Oh, okay, that makes sense. So looking ahead then, what are the potential catalysts that could push Richtech forward? And on the flip side, what are the key risks investors should really keep an eye on? Well, besides the official Russell Index edition happening very soon, which we've covered.
Right, the formal inclusion.
Yeah, we can probably anticipate more media coverage, more customer interest coming out of those product launches and demos they did at CES 2025. People are still talking about that. And those facility expansions in Vegas and Newark, they definitely position them for much higher production volumes if the demand materializes like they forecast. And as you just said, continuing to deploy across diverse industries should help mitigate that reliance on any single vertical.
If we zoom out a bit, the opportunities for more visibility and that increased production capacity are, well, they're significant for a company at this growth stage, no doubt. However, that ongoing need for substantial capital investment to fuel the rapid scaling, that remains a key risk, especially if revenue growth doesn't accelerate fast enough to start covering those big expenses.
The cash burn issue.
Precisely. And we also have to consider broader macroeconomic factors. Shifts in interest rates could impact their access to capital, or just as critically, affect their customers' budgets for buying automation solutions. Big purchases might get delayed. On the positive side, currently, there are no reports of major legal or regulatory challenges, which is good. But any adverse development there, in such a relatively new industry, could quickly change sentiment.
That's true. And speaking of sentiment, investor chatter online has definitely picked up since late May. We've seen comments on places like Reddit talking about a Russell bump incoming, clearly tied to the index news. Over on X, formerly Twitter, there's excitement about the Index Edition 2 and even some speculation about future contracts after that Space Force event. Saw one user playfully asking if Adam is going interstellar.
Right. Space cocktails today, moon deliveries tomorrow.
Maybe, but there's also caution out there about the ongoing net losses. You see people noting it's a growth story, but watch cash burn. So it's definitely a mix of optimism and prudence.
And that social sentiment, it's valuable, right? It gives you insight into market psychology, what people are focusing on, but you always need to take it with a grain of salt and do your own verification. That mixed sentiment you described, optimism about the future growth, tempered by a clear awareness of the current losses, it really does seem to encapsulate that hold recommendation we've seen floating around. It suggests many investors are kind of in a wait-and-see mode.
Okay, so let's try and wrap this up. To summarize our look into Richtech Robotics, the company definitely shows strong innovation. Growing market recognition, too, especially with that imminent entry into the Russell indexes. These factors certainly seem positive for its long-term prospects and continued visibility.
Agreed.
However, the current financial picture, particularly those operating losses, introduces some real uncertainty about near-term profitability, even with that admittedly impressive gross margin. So for you, the listener, this really highlights a critical aspect of evaluating these emerging tech companies, doesn't it? Often, the market seems to prioritize a compelling growth story, the strategic positioning over immediate profitability. Investors watching this space will really need to monitor upcoming earnings releases closely, weighing both the overall growth potential of the service robot sector and the specific execution risks Richtech faces as it tries to scale up. And this brings up, I think, an important question for all of us interested in these areas. In a rapidly evolving industry like service robotics, how much weight should we really give to innovative potential and market positioning versus the cold, hard facts of the immediate bottom line? It's a dynamic tension, that's for sure, and it defines many of today's most talked about growth companies. All right, that's it for this exploration. We hope this has given you a clear and engaging look at Richtech Robotics. Until next time, keep learning and keep digging deeper.